Welcome to the Paper Trail, where we follow the journey, my journey, through the world of a CEO of a mortgage note fund. I'm Chris Seveney, and after years of buying, managing, and selling notes with Seveney Investments, I'm here to share the real stories behind the deals. What went right, what went wrong, and what I wish I knew earlier. From non-performing loans to seller financing to private lending, this show is about more than strategies, about growing your business, learning to follow the paper trail, and doing the due diligence that separates the pros from the rest. Now, let's hit the trail running. On today's episode, I had the privilege to speak to Kevin Kim, a leading authority in securities law and fund formation within the private lending space. Kevin, who leads a corporate securities practice with Geraci, and if you haven't heard of Geraci, they provide a ton of content out there on the web, online. They host conferences, and he has, in his team, structured hundreds of private placement memorandums and other investment vehicles, from mortgage fund to debt offerings, syndications. He's been recognized as an educator and one of the lead instructors for their certified fund management course. We had the privilege to talk to Kevin about the Paper Trail Conference, what he's going to be talking about September 18th to 20th in Chandler, Arizona. And again, we're trying to get to let people know who the speakers are we're bringing to this awesome event. So hope you enjoy this episode. Hey, Kevin, how are you doing today?
Fantastic.
So pretty little crazy story. I was telling Kevin before we hopped on today, being in the mortgage, in the note space, you see some interesting things. And
Oh, yeah.
Kevin, who's joining us today, who is an attorney, and why don't you tell us a little bit about, what you're doing today and what got you into becoming an attorney?
Yeah, so I am a partner at Geraci LLP. We are the nation's largest law firm dedicated to private lending. We focus in the world of, I guess you can call it non-bank real estate finance. We work with small and large operators, from local mom and pop operations all the way up to the institutions and some quasi banks. And our role is that of counsel, right? So we are their transaction attorney. We are their compliance attorney. We are, in California, the litigation attorneys. And we live and breathe all things private lending, hard money lending, private money lending, however you want to call it, right? We do a lot more work in residential than we do in commercial, and that's just by virtue of the growth of that sector. I lead the firm's corporate and securities practice, so I'm a securities attorney by training, and I do private offerings and crowdfunding and fintech work, and then a little bit of corporate M&A and a lot of licensing work as well for private lenders. And so we are actively involved in forming new lenders and helping them set up their funds or their capital raising opportunities to build balance sheet strategies. We also advise them on big picture strategy. And then we also get them licensed, right? So if they need a license in a certain state, we'll walk them through that. We'll apply for it on their behalf. And then we also handle any kind of like M&A, usually on the sell side. Our clients are typically the ones selling, but once in a while, we'll represent a buyer. As for me, I joined the firm back in 2014. Funny story, I'm actually a third generation banker. So my father was a banker. His father was a banker in Korea. And I followed in their footsteps and worked in banking for a little while after college. And did not enjoy the world of banking, but did definitely enjoy being a loan officer and enjoyed underwriting and understanding how real estate works and how loans work. It was really eye-opening. I got it relatively easily, and I think it's probably genetic, right? So, and then went to law school and found myself excelling in the world of corporate law, finance law, and M&A and securities transactions and securities law. And so I ended up during my time in law school, and I worked at the SEC, the SBA. So a lot of this kind of finance-related, investment-related jobs during law school. I was actually going to go work for the SEC, but I graduated during 2009. So that kind of killed the opportunity right there. So that wasn't fun. And for a year, just did whatever I could to pay the bills. Worked at a boutique shops doing litigation for a little while. Figured, you know what? There's no jobs but litigation jobs. Might as well learn litigation. Hated it, and ended up working at a small boutique, working with uh, international, mostly Asian banks and their U.S. counterparties. And so that was a very nice segment of my career. Then I had my own office for a little while. I joined Geraci as a contract attorney, and then they got busy, and one of the partners was retiring, and so he happened to be my boss, right? And so he was retiring and effectively took over the practice, and here we are today.
Yeah.
And thanks to the efforts of my partners, our wonderful marketing team, particularly um, the efforts of people like Nima Dagbandan and Melissa Morrell and Dennis and Ruby, we've really been able to entrench ourselves in the world that is private lending, right? So both residential and commercial. And we find ourselves being, I would say, like 97% of our client list is in that arena, right? We have a
Yeah.
handful of clients who are real estate developers. 'Cause I do securities work as well on that side of the house, but
Yep.
it's mostly lenders. And so by virtue of that, I've become quite well versed in the world of fund formation for these lenders, but across the industry and across sizes, right? Like you can be a brand new emerging manager, and you could be managing $5 billion. The kind of
Yeah.
depends on who they are, but they are all kind of on our client list, and we work with them just the same. And so it's been really great to watch both the industry grow at all levels, but it's also been really great to see our clients grow. And I've been really honored to be a part of that.
And one of the things I think that's very rare about your firm is, I'll use the term, it's a one-stop shop. And what I mean by that is, you mentioned you've got formation, you can get the licensing, which, there's certain states you need to be licensed in this. If you're going to raise money, Kevin can write your 506B or C or whatever type of offering that you want to go in. If you're looking for then to, start originating loans and you're looking for the documents, Nima and that team can then get all the documents written and handle the closings for you. And basically you don't have to go outside of that, I'm aware of, your firm to get something done within the space. You kind of got all the bases covered, correct?
We try our best, especially transactionally speaking.
Yeah.
We try to be all things when it comes to the transaction side. The only area probably can't help with is like, national foreclosure.
Foreclosure, yeah.
We're working on that, but we can't do it yet. And we haven't solved the problem of like tax, right? We just can't, we didn't, we found that it's better to use CPAs than to bring on a tax attorney partner, because those tax attorneys, you think I'm expensive. They can be really pricey, and they don't really give you the best answer. So, I find that CPA stuff is also some of the areas that, it's very important to our clients.
So I do joke, again, attorneys keep me afloat. And I always joke with an attorney, and especially a tax attorney, when you ask a question, the initial response is always, it depends.
Oh, yeah.
It depends. Yeah. And tax attorneys are really, interesting in regards to certain things. And I can see why, because tax laws are, and the IRS code is not black and white as compared to other types of I'll say real estate law has a lot of case law behind it in those states.
Right.
So so as you mentioned, you handle a lot on the security side of things, with the investors and so forth, and writing some of these offerings for them. When somebody comes to you, and again, you're an attorney, and I'll say you don't provide any types of financial advice or anything, but what are some of the common mistakes or things that you try and get people on the right path for when they want to go out and start raising money? Because I know, again, we raise money. Going from, hey, I'm writing some private loans, to raising capital goes from being a lender to running a business. And it's also, different. What are some of the things that you see that, you try and...
Without getting too granular, I think the biggest flaw that we find is that people think that, like you said, right, the idea of like I funded a few loans,
Hmm.
therefore I'm a lender, right? I'm like, let's hold on. There is a difference between someone that invests in loans that are originated by somebody else and serviced by
Hmm.
somebody else versus someone that is in the active trader business of originating loans, servicing
Hmm.
loans, dealing with borrower requests,
Yep.
marketing the business, and really trying to scale it, right? And that's
Hmm.
where we find the best performers, right? The clients who come to us and say, "All right, I think I want to raise some money." It's those people that are kind of a little bit more ready, right? And what I
Hmm.
find is also people underestimate how hard raising capital is, right? It's not the easiest thing in the world because you're really trying to build
Hmm.
multiple layers of trust, but you're also building multiple layers of what I would consider financial aptitude and
Hmm.
conveying that aptitude to the investor, right? And you have to understand, you have to kind of look at it from two lenses, right? Both on the
Hmm.
lending side for your business, but also effectively wealth management, right? And you really have to, you're not an advisor, but you have to act as a fiduciary in that respect. And so there's a lot of hats you have to wear. You have to have a certain set of skills to be very good at raising capital and have a certain network. And it's not the easiest thing. I don't think it's the most challenging thing. I actually think it's much harder to scale a private lending business. But at the same time, many people out there underestimate, how much work it is, and they also underestimate like the tools they need. We unfortunately in the private sector of raising capital, there's just too many I would call them low cost providers and gurus out there that kind of just like drop a doc set with you and say, all right, have fun, go do the thing, right? And you're trying to save money, but in reality, because you chose to save money on legal, accounting, and all the other pieces, you may have put yourself in a situation where like you make a mistake because you didn't know any better,
Hmm.
right? And lo and behold, now you're in trouble with the regulator, or you're in trouble with your investors, or you're in trouble with something else. Who knows, right? And so, one of the things we always tell people is like, this is not an arena you want to cut corners in, particularly because the SEC is right there, right? And they're no slouches, right? And same thing with your local lending regulator, right? And so
Hmm.
these kind of things, and the IRS too, right? So there's a
Yep.
lot of that kind of stuff that I see a lot of. Thankfully, with the growth of the industry and the increase of sophistication,
Hmm.
people have been able to really, I would say, professionalize their businesses, institutionalize their businesses, and that's having a really good effect on the industry. So.
Yeah, I think, looking back, the Jobs Act has had a very big benefit to, the private lending space in regards to
Sure, yeah.
raising capital. That's huge. But as you mentioned, there's too many gurus out there who I think make it sound like it's so easy to raise capital and you can do
Yeah.
it with no money and like, hey, I can go get a offering docs put together for like 2,500 bucks or something like that. And, I've read some that I've seen that I just scratch my head of like who wrote these because there
Mhm.
weren't even terms in there for what the returns were for the investor or how you redeemed or how long your money had to stay in
Yeah.
and and
And it
what's
puts you in a weird position, right? Because every investor's worried,
yeah.
right? Everyone's, it's a trust issue, right? Are you a Ponzi
Mm.
scheme or are you not, right? And
Yeah.
so
Oh,
it,
100%. Yeah.
and
Hmm.
the interesting part about our industry is a lot of the investors in our industry, LPs particularly, have investments in other strategies.
Yep.
And so if you come to the table with documents and packages and systems and processes and a business that looks like
Legit.
amateur hour, right?
Yeah. Mhm.
You're not going to be able to raise the money that
Mhm.
those guys, your competitors, have been able to,
Yep.
right? And there's a finite universe that you can play in, and that's going to be like your immediate network, and that's really as
Yeah.
far as you can get with it, you know?
Mhm. Yeah, and one of the things that I've seen with some people that I talk with who have attempted and unfortunately weren't successful, and we've talked with some of the lessons learned is when they try and do, I'll call it, a debt fund and lend money is they may go raise $2 million and a lot of times they overshoot the returns they provide to their investors because what they forget to mention is or account for is just because you got $2 million that doesn't mean you're going to have a loan perfectly that fits that 2 million because you still need operating costs and everything else and you need to put money in holding and some of these other avenues and so forth. So if you're charging a borrower, let's just say you're doing a private loan at 10%, that doesn't mean that it's like, oh, well, I'll give my investor 9% and I'll take 1% off the top. It
Not how
doesn't
it works.
work like that.
Yep.
And I think
Yeah.
people find out the hard
I mean
way.
that's one of the flawed assumptions, right? You're going to be fully
Yeah.
deployed at all times, but
Yeah.
and the flip side of that is that you're not going to be able to raise enough money to satisfy your incoming demand,
Yep.
right? On the loan
Hmm.
side.
Hmm.
But on top of all of that, if you don't have a grasp, if you're only understanding what you're doing in your strategy at the given time, from a rates and points standpoint,
Yep.
you're far from understanding what you're going to do in 3 years as you build a business.
Hmm.
You have to understand, like, hey, once you get to that point, that hopefully you're
Hmm.
competing with bigger shops, meaning that you have to understand what the rates are.
Yeah.
What we've noticed is a lot of people come like, oh, I'm in California, I'm doing 14-3. Okay, that means you're doing very, very narrow stuff, like
Hmm.
a narrow market for what you're doing.
Hmm.
And if you're going to scale, right? If you're really going to scale, you have to assume that you're going to be offering at 10 and 2. That's what everyone else in California is offering.
Yep.
So
Hmm.
you better understand that your fund has to have those assumptions in mind,
Hmm.
right? And
Yep.
that's one of the
Hmm.
flaws is
Hmm.
that a lot of attorneys don't act as a consultant,
Hmm.
walking the client through certain assumptions,
Hmm.
and they just do what they're told. And unfortunately, that ends up with a
Hmm.
situation where the client's now offering 12% in a California market, and they're doing
It's a,
10% loans.
well,
So,
I mean,
yeah,
10%, I know year and a half ago, I had people talking about like in the San Diego area, they were like some people were at like 9 and
yeah. I mean, in
this is a,
2019, we the average fix and flip
mhm,
rate in California was 8.5%, right? And
mhm,
1 point. At one point, it got so
yep,
aggressive here that it
mhm,
was 8.5 and 1. It got
mhm,
better over time,
mhm,
but it gets really competitive here, right? And
yep,
that goes for Texas,
mhm,
particularly the major metros. That goes for
mhm,
the Miami Dade
yep,
market.
mhm.
A lot of the major metros are very
Very
competitive.
aggressive. Yeah, because what's there's a lot more people out there and there's been a lot of money, it seems, pushed into this space. And I know a lot of people right now talk about other asset classes like seller financing and other types of, and they're like, oh, that's I don't know, a $3 billion, I forget whatever size industry they say. And I'm like, yeah, that's not, private lending is just off the charts right now in
Right.
regards to probably 10x that, I think, or I forget
Way
what you
more than
probably
that. I
know.
think
Yeah.
we're estimating 10 to $12 billion institutional capital flowing in this year, fiscal year
Yeah.
25.
Hmm.
And overall market size, if you factor in DSCR, is now in the trillions, right? So
Yeah.
it's a huge market compared to where it was in 2018, 2019,
Hmm.
where those pockets,
Hmm.
those seller financing,
Yep.
the
Hmm.
consumer bridge product,
Hmm.
the EMD financing, the gap
Yep.
funding, these random kind of, like, I guess you can call them fringe transactions that
Hmm.
happen in the market. They're
Yep.
fine for kind of like, I guess you can call them smaller shops, but the challenging issue is there's no scale to it.
Yeah.
There's a reason for that, right?
Hmm. Yeah.
Professional borrowers don't do those things.
Yeah, I was gonna say, if you're doing EMD, to me, it's like you might as well just be, call yourself Capital One or Chase because that's really your credit card at that point in
You're a
time.
credit card. You
Yeah,
were literally a credit card. Yeah.
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 But and yeah, to try and scale that would be extremely challenging.
Extremely. Yeah.
Now, we talked about, kind of the offerings and the raising the capital and, scaling along those lines. And have you seen anything or, that can lead to roadblocks in the future, whether it's additional state licensing on private lenders, because I know states on the residential side, because we also
Oh
play a
yeah.
little bit in that, have gotten very ornery, and
Mhm.
trying to protect more borrowers, as well as
Mhm.
the SEC in regards to, or even state regulators in regards to offering docs. And with multifamily has taken a little bit of a beating over the last few years, and
It's
some
getting
people,
better. It's
yeah,
gotten better.
much better, yeah. But some people, uh, again, unfortunately, what I see a lot of times is, hey, look, a deal's gone bad, and people just assume that, oh, it's fraud, and they try and file something or whatnot, where
Mhm.
the deal went bad. So sometimes and I live outside of Washington, D.C. So it almost feels like a yo-yo sometimes of when something happens, they just go to an extreme to create something, to protect it, but it's just overblown. And I'm just curious if you can think that it will be put more restrictions on the space and certain things that might get restricted, for example, like
Yeah.
default interest rates or anything like that.
Well, yeah. So there are certain states you have to watch out for that kind of stuff for, right?
Yeah.
So in California is a good example. California has that Hunter decision
Mhm.
that did technically eliminate the ability to charge default interest before maturity default.
Sure.
That's a thing in California. It's litigation, a product of litigation. Yeah. So
Yeah.
other states don't do
Mhm.
that, right? The
Yep.
beautiful part about private lending is that it's commercial, and
Hmm.
so yeah, there are licensing states, about 10 of them, but the rest of the market is relatively flexible. And there's a lot of deference, right? Because it's a commercial transaction. The challenging
Hmm.
issue is, like you put it, is when you start seeing these transactions that were poorly written and they were actually consumer loans, or the plaintiff's able to turn it into a consumer loan, right? Which
Hmm.
is also like one of the reasons why I tell lenders, even if you can legally in your home state, you probably shouldn't lend to an individual, like ever,
Hmm.
right?
Yeah.
On a residential deal, and you should also
Hmm.
be like following our best practices when it comes to business purpose confirmation.
Affidavits. Yep.
Yeah, I mean we do handwriting, right? So that's important.
Hmm.
The other component is grossly overestimating and overusing capital markets. We've seen too many people get burned when Wall Street's fickle, right? Wall Street
Yep.
is very smart. There
Hmm.
a lot of Ivy League guys working
Hmm.
those desks, and
Hmm.
they're very smart, right? But they're very fickle, right? And so when the market takes a left turn for whatever reason, they're going to pull out. And so
Hmm.
what I've noticed was a lot of lenders were over reliant and had put all their eggs in that basket, and they found themselves in a world of hurt when they pulled out, right?
Hmm.
Or they became more stringent and they started enforcing their buyback clauses. And
Yep.
so the lenders were in trouble. And so many of those lenders are not here today.
Hmm.
Uh, on top of that issue, there's probably, at the small level, the challenging issue is a lot of these lenders get bad information out there. And
Hmm.
so they run things just kind of like really fast and loose.
Hmm.
And it comes back to haunt them, right? We had a client years and years and years ago. They didn't get the best advice. They used their local attorney, and he was a real estate guy. He didn't really know finance law, and
Hmm.
and you know, knock on the door came from the Virginia state regulator. You know what I mean? So
Yeah. Hmm.
thankfully, they're nice, right? Most state
Hmm.
regulators are pretty nice, right? There are a
Hmm.
handful that are pretty aggressive, but that it's an unwanted headache,
Yeah.
right? And it was a securities issue, it was a lending issue, all kinds of stuff, and
Hmm.
thankfully we were able to put it to bed. But like a lot of times, what ends up happening is they freak out, and then they put their hands up, and then they end up signing something that they shouldn't have signed.
Hmm.
And I hate to say this, but like it's a simple. Like our firm is everywhere nowadays. We're
Hmm.
online. You can find us easily.
Hmm.
Like
Hmm.
it's easy to find an expert like us,
Hmm.
and that's one of the things that I still am frustrated with. Is like, guys, you just you had to cut that corner. You know what I mean? Like,
Yeah. Yeah.
you get there
Hmm.
are national experts in this arena, not just us, right?
Hmm.
Contact them, right? And that's so important. You may have a
Hmm.
friend at a national shop, like contact them, because
Hmm.
there's a lot of resources in our industry now.
Hmm.
There's really no excuse to be making these kind of what I call amateur hour mistakes.
Yeah.
And what they're surprised to find out is like, yeah, we represent small shops.
Hmm.
We also represent large shops. We get this misnomer about like, oh, we're too big for them. Like, no, 90% of our clients are small businesses, like
Yeah.
2-man shops. Like, it's not like
Hmm.
we don't have 2-man shop clients,
Hmm.
right? So it's very small organizations that end up scaling up and doing really well, right? And so, that's part of who we are as a boutique law firm, and that's one of the things I always get frustrated. Like, ah, man, I wish you had called me because I could have walked you. I could have walked you through this
Hmm.
when it was a question, not an action. So
Oh, I'm laughing right now because I was on actually a call the other day with a regulator about getting licensed, and we have financial audited financials, and we submitted them. And in NMLS, you have to fill out information as well. And a typical balance sheet has assets, liabilities, and owner equity. And we fill everything out, and then we uploaded our audited financials. And our audited financials don't have a line item that says, one line item that says owner equity. It's got common shares, holders,
mhm.
and it's like, okay, this plus this, and do the math. And
the regulator who's reviewing it keeps arguing with me that the numbers don't match and that like and I literally am like telling them, and the auditing firm we use is I think the fifth largest company,
Mm-hmm.
just outside the big three or four out of Pennsylvania. And they're like questioning their audit. And I'm like, we also submitted this to the SEC and like, nobody else questions this. And I'm like, the maths, but they're not getting it. And I'm just trying to like explain to them. And I'm being as polite as possible because I also don't want them knocking on my door, but I'm trying to figure out like how can I like get to them. And this is where it's like one of these things where I'm at the point of literally I'm gonna, basically pick up the phone and call you and say,
Yeah.
hey, look, can you basically, because I know your services assist with licensing, and say, I'm just going to hand this over to you and it's worth the aggravation and the cost. And
That's another thing
yeah,
with licensing. Yeah,
yeah,
it's like that's one of the aggravating things because it's
mm,
yeah, you gotta speak their language
yeah,
sometimes, right? The
yeah,
examiner's
mm,
language. They're
mm,
not always that well versed in the world of finance.
yeah,
And that goes to another topic is like they
mm,
also don't really understand the difference between a business purpose residential loan and a commercial
oh,
purpose residential loan, right? They have trouble digesting the
oh,
concept. And so we find ourselves in situations where
mm,
the lender's getting investigated in a state where
mm,
they don't need a license.
yeah,
And they're being accused
mm,
of all kinds of things. Like I gotta prove a negative in this situation because
yeah, mm,
and it was as
oh,
simple as like, oh, you didn't get the business purpose affidavit, or as simple as like, oh, you didn't
yeah,
lend to an.
mm, yeah.
Oh,
So,
come on, man! Like,
well,
so.
we had that issue when, again, so we have a Regulation A plus offering.
Oh yeah, yeah.
And when we submit every 12 months, you have to resubmit what's called
Yep.
your public offering statement again. First year, we got qualified. Then a year later, we submit, no comments, basically just like rubber stamp. Second year, we get it and we get like 7 pages of questions.
Mm-hmm.
And we're like,
Mm-hmm.
what is going on? My attorney's like perplexed. And what happened was, in our update, we talked about more about doing business purpose loans and they interpreted a business purpose loan as me giving somebody a loan to operate a restaurant or sell t-shirts.
Mm-hmm.
Even though we described it that everything we do by real estate, they got confused by that and basically called like a timeout of like, whoa, you went from a real estate company now to like a bank essentially. Like we need more info on this. And then
Yeah.
after we had to go back and forth with them on it, so it was still pretty quick. And we actually
Yeah.
got on the phone with them and just explained it to them of, no, the terminology business purpose means just non-owner, like an LLC, an investor who has an LLC to go buy a rental property.
Mm-hmm.
And then after we explained that to them, just like you said, they're like, oh, now you're talking our language, you're good. So
Yeah. Happens a lot with the commission, especially
yep,
they're yeah, it's a rotate. People forget this. It's a rotating door at the commission, right? So
yep,
you get to understand like there are attorneys there that are in for a year or two. They're gone
yep,
for they're gone for a year or two. They come back,
mhm,
right? So it's
yeah,
a it
mm,
it's a fun time with the
yeah.
commission,
So
especially on those Reg A's because
so
yeah.
yeah, the one thing I would tell anybody, and you can probably preach to this, is if you're looking to grow your business, understand it takes time to work with your attorney to draft your documents if you're going to do a 506c or whatnot, because a lot of people, you've got I'm just going to use the term, a template per se of what needs to go in there, but things like, oh, what's your waterfall structure, or what's your redemption period, or do you have a death and disability clause where somebody could, there's a million questions that
Mm-hmm.
when I went through that my first attorney asked me, and I was like, oh boy, let me get back to you. So it's not just like, oh, I'm going to hop on a phone with Kevin and in 15 minutes he can, chat
Yeah.
GPT and spit out the
No.
answer.
I wish we could because I could
Yeah.
charge a lot less, but it's not that. Every deal is
Yeah.
bespoke. Every lender is different.
Yep.
I mean, some of the factors around, I mean, this is one common factor that's overlooked, like leverage. How are you going to
Yeah.
approach leverage? Are you going to obtain leverage? If so, how? If so, how much? If so, from who? Right? And it's
Yep.
commonly overlooked,
Yep.
right? And then another topic is like, oh, are your fees in line with market? Like, it's not just what your fees are going to be. Are your fees in
Yep.
line with what your competitors are charging? Because
Mm.
I can tell you, Joe Schmo down the street from you right, is charging this,
Yeah.
right? And I can tell them that because it's public knowledge. Like
Yeah.
those guys out there who are competing with you in your market are charging X, Y, and Z. You better be sure that you're able to compete, because a lot of times what happens is these guys think about like what's good for them, right?
Yeah.
That's oftentimes a mistake. Like, well, no. This is a fund, right? It has to be good for the investor too, right? So
yeah.
So
Yeah.
that's another issue we find ourselves in. But yeah, I mean, it's every deal is bespoke. Every deal is every business plan is different. Every client's approach is different, and every client's profile is different. So like I wish we could standardize this like we have our loan document services, but we can't. And I've tried, and every time is like I'm really having to massage the fact patterns with the client and explain to them like, here is the reaction you're going to get if you do this. Here's what the market can bear if you do that. Not really legal, but like here's what are the ramifications of doing those things,
And also if you look at, again, goes back to doing business. If you're doing business in Arizona, California, hey,
100%.
You're gonna get licensed, and that's good. California.
Oh my goodness, yeah. And I always get this a lot, like, oh, like I don't need a license. Like, no, you do.
Yeah.
Care what that guy told you on the internet. This is still mortgage lending, and some states don't care, like California. And then we find ourselves in a situation where they get the wrong license sometimes, right? Or they put the license in the wrong place sometimes. That's a big issue in California and Nevada too. Like, oh, you have the right license, but it's functionally useless because I can't get the loans into the fund now. So that's another issue, right? So
I was gonna say, what are you originating, and are you using multiple entities that you're putting in different? Because then your licensing, like, how does that come into play regarding who's really originating the loan? And so there's so many nuanced things that we could talk all day on. But long story short is, you've hit the nail on the head. Use a professional. Don't cut corners on it. There's a cost of doing business, and you just have to understand and absorb those costs. And I'm sure if somebody called you, Kevin, and said, hey, look, what's an approximate range for putting together this type of information? There's ballpark numbers that typically can be thrown out.
Yeah. And we're not super expensive either, I think, right? So we're not in you're not spending $100,000 to do a fund. You're not spending even $50,000 to do a fund with me, right? So we're sub that. It depends on the transaction. Obviously, every deal is a little bit different, but like most like run of the mill regulation D, B or C offering, it's going to be like between 30 and 40, right? You do a REIT, it's going to be more expensive. You do crowdfunding, Reg A, it's going to be more expensive. But aside from that, your average Reg D fund, we're right there, and it's not too far off because what's included is also my time, right? All my time's included in that. You're not going to see an invoice from me, and also all like a lot of the advisory work that you need aside from the legal work, and there's value to that,
So. It's just like you said, of asking that question of, okay, you want to do, you've written in this that you're going to do only loans in San Diego or Orange County, and you're this is what you're kind of targeting. That doesn't, you sure, you might want to take a look at that, or look at some competition, because that somebody could go spend 30,000, 40,000 and just be a failed business plan and have to go back and probably edit the PPM,
100%.
which
you find that a lot.
Then if you have investors in there, then it's more challenging to go edit, adding an addenda to your PPM or.
Oh, it's not fun. Yeah. I'd rather avoid that if we can avoid it. So. And understanding the economics is a huge value add from our standpoint. Because we have the data. Like it's not, a lot of folks are like, well, prove it. Well, here's literally, what is it? $5 billion of loans being done on the Lightnux platform. Here's all the RTL data that nobody has on interest. Like it's, and it's like, it's there. You can't refute the fact that market is doing 10%, not 12, right?
And correct me if I'm wrong. I mean, you guys host a conference multiple times per year, and I think you also publish some of that data throughout the year on kind of what the market's headed, where it's going, so you can see, hey, look, what's an average DSCR or RTL, fix and flip, and if I recall, like, hey, Dallas is higher than this place, but this place is lower, so you provide all that.
Nima does a state of the market for AAPL every quarter, and he's doing one soon with Kevin Warner from Renovo. And he always presents the data from Lightning Docs, right? And it's really solid data because the amount of users and loan volume out of that is substantial. And beyond that, yes, we do our webinars internally, and then we have our conferences every year. And then Nima and I get on stage at APL every year, and we do a state of the market as well for the whole year, right? And so, and where we're headed. So yes, we have 2 conferences every year. We're having one in August in Newport Beach. That's going to be a good one. And then, look out for our webinars. They're all on our website, in our emails. So sign up for our newsletter and you'll get it. But yeah, I mean, the one coming up in a few days, I think, for APL that Nima's doing. And yeah, rate data, volume data, market data, MSA level data, right? So you'll see what markets are suffering. And there's also data on volume. So it's really important to see.
Yep. The other thing that I enjoy with the content that you provide is, for example, you just had one about is it still a good time to do a REIT? I watched that. And then, but you also talk about other types of offerings and other types of like, hey, licenses in California or other states. So you can also, you provide a lot of what I'll call free content. So once you could clearly be prepared when
100%.
somebody goes to talk to you and say, hey, I've watched all these videos. I'm trying to figure out what I'm doing. Like, for example, we invest a lot in the non-performing side of things, which when again, this was before I knew you guys existed. I spoke to an attorney and was like, yeah, you don't want to REIT because REIT's going to be passive. And then you'll have to kind of do all this other stuff. So he's like, don't do a REIT.
There are ways, but yeah, it's tricky when you're in NPL. But like, our YouTube page has all of our webinars, all of our interviews, all of my podcast episodes. It's really easy to get in there. YouTube, Geraci LLP, it's there. And webinars, there's a whole list of webinars going back 4 or 5 years. And yeah, we've covered REITs, licensing, offshore capital raising, fund structuring. And then we also have the class that we teach for APL. So there's a lot of resources out there. So, especially on capital raising on funds, we put out a lot of content and it's really accessible. And so if you're a member of APL, the fund manager course is really straightforward. If you're not, our website and our YouTube page have all the webinars on those topics. So it's not very challenging to absorb the information. And I always actually send links. Like before I do a call on a REIT, I'll send a REIT webinar that I've done. That way they're prepared for the call. Right.
Well, as we wrap up, thanks again, Kevin, for coming on. If people want to reach out to learn more about your services, what's the best way for them to reach out? And I know if you're watching this online, you can see he's got his website link down in the corner. But I'll let you.
You can just email me. It's simple, k.kim@GeraciLLP.com, and find us on our website. You can also find me specifically on our podcast platform for Lender Lounge with Kevin Kim. A lot of ways, right? You can also just Google Kevin Kim at Geraci and you'll find me somehow, some way. So
you're easy to find. You've got a good you got a good online presence. So.
Shout out to Casey and Megan on that one. They do they do God's work on that one. I don't know anything about that stuff.
Kevin, thanks for your time today. Appreciate it. And look forward to seeing you in a few months in Arizona.
Looking forward to it.
Okay, great. Thank you.
Thank you.
Thanks for joining me on this episode of The Paper Trail. I hope today's insights help you sharpen your note investing strategies. If you found value in this conversation, subscribe, leave a review, and share it with fellow investors. I'm Chris Seveney, reminding you to keep doing the work, trust the process, and always follow the paper trail. Until next time.